Hi, everyone. Hello, Warriors. I'm Dale Pinkert from TradeGATEHub.com, and we are sponsored and powered by TradeView Markets, where you can trade multiple instruments on one platform, competitive spreads. Check them out. I did a special report on Friday after Moses came down from the mountain, laid down a commandment of prices have to go lower. Very hawkish, as I anticipated that he would be. And left you with, we want to see what kind of follow through we'd get early next week to that move. And there's some very interesting things happening here. First of all, let me start with the dollar itself. So dollar did make new highs today, okay, by about 20 points from this prior high over here. As you can see, the daily never confirmed. What's really interesting is look at the 4-hour. Very glaring divergence between these two. I think there's a possibility that we're topping, although there could be a spike. The big economic report this week is the NFP on Friday. So if we get another strong number, we could rally again. But to me, it looks like it's in a topping mode. And what's important now this week is for you to check your weekly off numbers, which means what would give us a 2-week reversal. And in the dollar index, we need to close under 107.84.8. So that's 60 points from here, doable within the range. I want to go to euro now. I think that it's a possibility that we have put in bottom. The off number this week by a Friday close is par 41. So we're only 40 pips away from that. And something I pointed out to viewers, the difference between this low back here in July, we had a confirmed low, and the low that we're getting in here, there is some pretty good divergence here, and it didn't even make a new low. It did not take out the low. This was Paul, and we did not make a new low. We're trading back above the return line. And as I said last week when we were breaking down here into 99, is that my bet was the next 500 pips in euro would be not to the downside towards 95, but back to the upside, back towards that initially 101, and then 103.5 is going to be real important. And one of the reasons is the positioning in the euro. We have the largest net short position in the euro since the year 2020. And let's just take a little look at history. What happened back then in 2020, it was in February of 2020. So here we are, this was February. We had another low the month after, but look at the rally that ensued from this type of short position that we currently have in the market down here. So that's my view, that the whole world is bearish euro. I mean, there's not one piece of fundamental news. The hawks, actually, ECB hawks came out and they started talking about interest rate hikes. And I think you could now be long buying dips and be wrong under the low of the move, 99.89. Friday's going to be the big day. So what do? You don't put on a full position. You have partial positions on. And then if the number comes in stronger and we get pullbacks either during the week prior to the NFP, you can accumulate it with the same line in the sand here in the euro. Now, when I look at the yen and I wanted to see follow through, you could see on the 4-hour, we really did not diverge. You could call it a little divergence, but it's over 70. So at this point, I'm not ready to declare a top in yen. The yen could still move higher, although I am pretty impressed with the action that we had on Friday in interest rates, especially the TLT. And I believe that this could be setting up a major rally. If I gave you some objectives, I think at least we have equality from this, which would take you to 122, 124. And then if we get a fib extension of this, it could take you all the way back down towards the breakdown. And this breakdown came in, right around 130, 132. And in that environment, I would think that eventually the S&Ps would put in a low and begin to melt up again. I think there is a shot, and this is something else I talked about when I was on the air last week with Mike, and I showed this daily 200-day. Here we are, tagged it exactly. I'm not saying that this could be the low. We could move down towards 39.20 in the days ahead. But again, I'm not looking for a crash unless we take out 38.50 on the downside. But I want to stay focused on the dollar and the instruments above it. You know, last week I said that, you know, it's possible that the USD-CAD could try 78.6. It didn't quite get there. But if you look at a 4-hour chart, again, glaring divergence here. I'm bearish. I think it could short, have a piece on, put another piece on, should it get up towards this 78.6 level, which is 31.11. So the commodity currencies have been the preferred currencies to be long. The way it's paired is USD-CAD, is you would be short USD-CAD. So we're back under the 61.8 level. This to me looks like you know, a failing rally if you look at a long-term chart. All right, a little bit too much there on the fibs. Let's just go to the weekly. You can tell the high that we had back in July. Again, this looks corrective to me. That wasn't the top last week, although we caught a piece of it, and you have to stick with it. The minute you turn your head away is when it happens, then without you. Also, the Aussie up 9, and the area that it held today. I like Aussie. You have to be long Aussie. I talked about a potential stop hunt last week under these lows. Then it didn't look likely, but Powell gave it to us. So we've taken out the stops here. I'd be long here, and I'd buy all the way down to 67.80, which was only 100 pips. I'd be accumulating Aussie. I'd have a piece on now. And again, I just want to stress that Dixie is trying to put in a reversal day. Perhaps we try and spike above today's highs, especially on a strong number. But again, I don't think it'll confirm. And I talked about this being a triangle, and that sometimes if it is a wave 4, and I'm not an Elliotician, I just know enough for me to be dangerous with it, that after a triangle like this, the next thrust up is terminal, meaning final. So we may have had the final high. It could do some work up here, but I would not be long dollars looking for the last 100 or 200 points that some of the dollar bulls are looking for, 110, 110.50. And actually, I'd be looking for a 2-week reversal by Friday. Something that reinforces long in euro is euro pound. It's been acting like a champ for a long time. We have successive higher lows. We broke through resistance. This is not a bearish indication for the euro, way outperforming the pound, which makes euro your preferred long over the pound. I don't even know how aggressively short I would be in the pound either, but since EG is working, I prefer the long side of the pound. Want to get to the gold, and you know, when you look at the gold on a daily, even though we took out these 61.8 lows here, we're back above it after, you know, flushing out stops. We flushed out stops both in gold and in silver under 1870. I like them, but I wouldn't add until I felt more comfortable about a yen high. But the other currencies that I have ideas on, I would go with it. You know, part of what I've been saying is going to be important to have a big turn in the metals. It's going to be a top in the dollar. I think that this is a possible top developing here today quietly at month's end. Also, you know, we'll have a lot more participation next week after the Labor Day holiday. So just a quick review. Too many bears in the euro. Divergence that we had on the daily. It's not going to take much to have a 2-week reversal, par 41. USD CAD between here and 78.6. I am looking for short positions, have a piece on, I'll add up here. Aussie, I have a piece on from lower after they took the stops on. I would add all the way down to 68.20 to 780 at the 78.6 level. Looks like a right shoulder is developing in the Aussie. S&Ps, I wouldn't get too bared up as long as we're holding 39.20. That's right in here above this breakout that we had above 39. And again, even though TLT is lower today, I believe we're developing a right shoulder, and the impetus for melt up in stocks would be a rally in the bonds. I don't think it's going to be because of risk off to get this rally in bonds. I think it's going to be because yields might be topping here. And there's your 10-year right now, still a failing rally with all this talk. And I know we have a Fed meeting next month, but again, I think we even made a new high, and there are divergences everywhere. So despite what Powell did, it may be the last hurrah on the dollar this week, especially if we get a 2-week reversal in the dollar, a 2-week reversal in the euro, a failure in USD CAD, a bottom and reversal in the Aussie. What will it take for a 2-week reversal in Aussie? We're already getting it. Aussie's been stronger than dirt. As long as we close above 68.77, that might even be a good place to buy it at 77. If we get a pullback, it's about a 30 point pullback, 27 point pullback. I still like gold, but I'm going to wait for I'd like to see the gold silver ratio flip, and it looks like we're going to try and make one more new high first, but prepare to also add to precious metal holdings and miners. Could be sometime this week, could be by the time the yen maybe makes one more new high. If it makes one more new high, look at this glaring divergence that we're getting on the weekly. We're still not at new highs, we're almost there. Look at the glaring divergence we're having on the daily, and what we need now is for the yen to come off a little bit, work lower, and then rally for a new high, and the RSI stay under 70. And I think a lot of this is going to be driven by the fact that even though Powell is a hawk, that yields are putting in higher lows on the 20-year. So the further you go out on the curve, the more constructive it is. And I think this is really going to be these are very over-owned. But the most contrarian trade and crowded trade, in my view right now, is the short side of the euro and the long side of the dollar. So, you can go with just partials on entries of the markets that I talked about and wait for the NFP, keep your stops in, and use the NFP as a possibility for adding. And if the NFP comes in weak and the dollar just sells off from there, and Aussie takes off, and USD CAD craters, you're there. Maybe not with a full position, but at least you have a piece on. I do believe we're entering a time frame where it makes sense to start fading the dollar again, and eventually adding to your gold holdings. It's a pretty nice stay in gold. So gold can outperform. This looks like the euro, only from a higher level. I own it. I didn't add yet, but I will add once I get another sell signal in US dollar yen. I invite everyone to join us in TradeGATEHub and share your ideas. We share them here. I post ideas in here. Mike does as well. And don't let Powell intimidate you. Just use your charts Like I said, when a big event like that is binary, and it's always good to be out for those kind of events, a Fed meeting, a big Fed speech by Powell. NFPs are going to be big. Some inflation data is important. But the number of the week is this Friday. And I'll leave you with the fact that the whole world is short this euro right here. And they're not looking at the divergence. They're not looking at the positioning of largest net short position in 2 years. And so that's what I see. I hope that my analysis is adding value to what you're attempting to do as a trader. It's a very difficult endeavor. In fact, I say when people say they know the secret to trading, I say there is no secret. The secret is hard work and living through adversity. And if that scares you, do something else. So everyone have a great trading day. Remember, don't just count your euros or your shares, count your blessings. Mike will be with you in an hour and a half, and I'll be back with Mike on, it will be tomorrow. And I have a great guest. It's going to be the first time I've interviewed him. He's been around for a while. I knew him when he didn't have gray hair. And I bet a lot of you guys in the room, or, some of you older guys remember Art Hogan. Art Hogan will be with us on Wednesday. And I'll see everyone